I'd like to share with you some important notes about bullish divergences that you may not know about that can alter how you look at these. And so let's jump right into it. And a bullish divergence really is when price action comes down and makes a low and then a lower low, while an indicator makes a low and a higher low, which means that it has bullish action coming into it. It's building up some pressure and something's got to give. Either the stock has got to run back up or the indicator has to roll back over. And then here's a case with an example with now. You can see we had a low right here, then rallied up and made a lower low. Meanwhile, on the indicator, it made a low and then a higher low. And I have an RSI right here. Now you'll notice we also have a low on the MACD, and then this actually is a lower low than the previous one. It's pretty close to equal, but it's actually slightly lower. And that's important because one thing that I want to point out is that there's differences between momentum indicators and oscillators. And oscillators like an RSI, and then a MACD would be like a momentum indicator. And sometimes they don't confirm one another. And so some traders will use both of them to confirm if there actually is a divergence. And in the truest sense of a divergence too, one thing is important. Either the RSI needs to come out of that reversal zone and back in, or the MACD needs to be below the zero line and then into, or should I say above the zero line and then back down. So a couple key items. Now, another thing that's important to understand about divergences is they don't always mean a change in trend. And I often hear something like that, like, okay, I see a divergence, we should see a change in trend. Well, here's an example where the MACD had a low and then a higher low. Maybe not got the same confirmation with the RSI, but it's close. But here's a low on the price action to a lower low, and so it went from here to here, right? So it needs to pop. Well, it actually did in fact pop. It came up, but what it did is it came up to a resistance level, back in here. And so, whoops, let me just draw a line in right here, right there. So it did rally back up. It just rallied to that resistance. And so again, it doesn't have to be like necessarily a change in trend. It can simply be a spot where it rolls back up to a resistance. But again, looking for that confirmation, looking for the low. So here we have an example where we have a low on the MACD up in the positive zone and then lower again. So we have a bullish rally here, if you will, on the MACD, and then those corresponding lows on the price action is dropping back down. And so watch from, again, to rally back up to resistance or to actually, in fact, be a change of trend. It can be one or the other, but so it could be either a short-term turnaround or it could be a long-term reversal. But oftentimes the idea behind it is just simply knowing that this is a spot where it potentially could rally back up, and at least for the interim, maybe the decline is running out of steam. And so, look those over, see what that lines up in your mind's eye, and see how that can help you.